Hey everybody, my name is Christopher Terry, CEO of iMarkets Live, and we are starting our Night Owl session, Sunday night webinar. We do this every single Sunday. I've been doing this gang since about 2002. I took a 2-year gap from 2013 into 2015. I took a 2-year gap where I stopped doing it because of the fact we were getting iMarkets Live off the ground. We were building it, and look, there's only so much one person could do. I happened to do a search on the internet for something, and I saw the Night Owl stuff that I used to do where there was some notes on a site. And I thought, you know what, let me bring it back into action. So about a month and a half ago, I brought it back to the table. Actually, it's been about 2 months. I brought it back to the table, and every Sunday night around 8 p.m. Eastern, and we get started. I give it time for people to get on. I'm not starting exactly 8 o'clock. 8:10, 8:05, 8:15. And we want everybody to get an experience where they come in and they watch me do my homework. They watch me do my homework for the week. Now, it's turned into, over the years, it had turned into doing my homework, plus doing a little bit of training. And what I do harmonic patterns, I do Elliott wave, I do support and resistance from swing highs and swing lows, trend line analysis, MACDs. I put a lot of different things on the table that I see that I feel that are important. A lot of traders look at it as a one-trick pony. They only do one type of thing. It could be the, I hear about this M and W pattern. It's not new. That was actually the first thing I learned in 1994 was the M and W pattern. It's not a new thing. It's been around forever. Higher lows, lower highs. That led to understanding trend. Everybody then starts to get into trend. Then you're starting to get into pattern price ratios and pattern and relationships. So my suggestion, when you're in the markets, you always want to be consistently learning. Don't ever sit there and think that you figured it all out. I've been in the markets 20 years, actually 22 years. I've been trading, and I haven't figured it out. Believe me, I'm the guy. I'm on YouTube every night. I'm learning. I'm learning from whoever. You never stop learning. Never start thinking you're above the markets or you're too great or you're allowed to take certain kind of risks that your account wouldn't justify. You have to really put into play, number one, risk. I chatted with the guy, and he put so much risk on the table this past week. This non-farm payroll blew his account up. And you know what? He's a winner. He will come back. He will figure it out. And I did the same thing. When I was in the markets my second year, I did the same thing. I blew my account up. Look, I get it. I get it. You got to be aggressive. I get it. People come to the markets because it's sexy, because you want to make a lot of money. I get it. All right. My suggestion, have 2 accounts set up. One account, you have limited risk. Whether it's $500, $1,000, $5,000, depending on your net worth, it could be $100,000. I don't know how rich you are, but the fact is, you put a small account only for aggressive trading. Number one. Number two, you have a second account for longer term, lower risk trading. I want you to be in the markets. So let's just say you had a $5,000 low risk account. Put a $500 risky account or a $1,000 risky account, whatever it may be. If you blow that account up, then you have to stand aside, go earn some money on the outside and come back and fill it up again. Do not take that money from your long-term account. What you want to do is, as you grow your short-term aggressive account, feed the higher, lower leverage account. You guys got me? You guys with me on this? Listen, I'm speaking to you like future millionaires, like future master traders, like future hedge fund managers. All right? I just didn't start the business. I just didn't start this. My goal is to keep you guys out of trouble. Number one, I'm keeping you out of trouble. I do not want to see you blow your accounts up. I get into conversation with some of you guys, and you hit me on Facebook, and it's like, what do I do here? What do you do there? Where were you 3 hours ago before you got in the trade that you knew everything? Now you're scared, and you hit me on Facebook. Help me. I'm not helping you. You help yourself at that point. I can't tell you why you got into a trade. I could tell you in advance what not to do, but I'm not going to advise you. All right? I don't do that. I can't do that. It's not fair to me because no matter what I say, I'm the bad guy. So I want to go through I just want to make that note that yes, have an account that's sexy. You need it. You need it. I need it. I need to be aggressive. On the other hand, have a longer term account, low risk, stay in the game forever. So I want to go through a couple of our products. As I mentioned, we have a couple of products. The first one is the Harmonic Scanner that I'll go through. Real quick, this is a product. It's a scanner. And then in the next 3 to 4 months, it's going to be released as an auto trader. An auto trader meaning that it's going to trade for you. What's going to happen is, and I'm not sure if I have the ability to do this now. Let me see if I could show you if I could. Okay, yes, I could. Let me erase my username and my password because the last time I did that, I had, hold on a second. Let me just show you. Oh my gosh. Okay. So right here, guys, this is the future auto trader. It's going to determine what times of day we're going to work, what times of margin per trade, how many trades are open at one time. You're going to have the power to turn this on and off. It's going to send you emails when the trades are in the process. Everything you need. I'm adding other line items here so that you have the power to actually have an auto trader that let me just put this here, that does everything for you. Now that's going to come in the next 3 months or so. So just letting you know now. I know I've been asked all the time. Currently, you have the scanner. And I'll go through this for those of you who don't have it. It's important. And then we'll get into the charts. We'll go over a couple of items. We have the scanner where it's set up where it shows the available patterns. I was asked to do this, by the way, because we have people here that heard about the scanner, don't know what it is. All right, the available patterns get lined up here. And I wrote this for myself. It wasn't me that wrote it. My programmer wrote it for me. There's another program out there that basically draws the patterns. It's an indicator. It's completely different than what we have. Ours is a scanner. It's a high-end scanner. So the market will come up with these patterns. You click on it and you see what will happen. All you're doing is click on it. Nothing like the normal MetaTrader 4 where you have to basically type everything in or push stuff over. Then on the left is the pattern info. It's giving you the actual pattern, the symbol, the time frame, again, the same thing, right? And then it gives you the ratios between X and A to B. It gives you from B, C, and D. It gives you all these ratios. When these ratios line up, that's when a pattern is created. It's called the harmonic pattern. Now, it gives you entry levels. It gives you risk points. It gives you targets. It takes your account right here, your account balance at a 50 to 1. It gives your account balance the free margin and then basically tells you what you can risk on a trade. Now, for instance, since it's only a small account, it's a demo, $1,000, basically you'd have to go to a 2 or 3% risk ratio, if you see here, because of the fact that it's such a high time frame. So when you have a smaller account, quite honestly, sometimes the risk is higher on your account if the stop is wider. So if you have a wider stop on a small account, you have to have common sense and say, you know what, the account is too small for a wide stop. Your risk is going to be a little bit higher, and if you choose to take it, that's fine. If not, it's your choice to stay away from it. All right. So just keep that in mind. It's all risk-based, all percentage-based. The other thing is, when you're looking at trading, all right, when you hear somebody lost 100 pips or 30 pips, look at the percentage that they lost. That's more important. If you have 100 pip risk with a 2% risk on the account, that means you're losing $20 on 100 pips, or a 20 pip risk and you're losing that same 2%. It's still 2% risk. Okay, keep that in mind. It's still 2%, no matter how you twist it. Keep a percentage risk, not just a pip risk. You know where your pip risk is going to be. For instance, let's just take this trade right here. And I didn't physically take this trade, but this turned out to be a harmonic trade that's successful. But let's just say you're trading it here, and right here would have been 40 pip risk. All right, a 40 pip risk, you can still put a 2% risk ratio on it, 5 micros, or whatever it is, so many micros per thousand. Right, I don't have the math in front of me. I have to look at it actually. So here it is, 5 micro lots per thousand, right? 2%. So you would have a 2% risk ratio. It doesn't matter the pip size. Once you define the pip risk, then go back and calculate how many lots you would need or what size you would need to accommodate 2%. Don't just throw on a standard lot and think you have risk. That doesn't work in trading. That's why people don't make it too long. They blow up. Always about percentage risk when looking at the markets. So what I like to do is I look at my scanner all the time. I'm always letting this go and I'm always watching it. What I like to do is I like to look at the markets, and we start hitting these zones. I bring it down to maybe a 15-minute chart. I look at the 15-minute chart of what is happening. I take my trend lines. I look at where support is. I look at where support is, for instance, down here, and I realize this whole area is now a support. I would work the buy side from this market. You may have some little dips at this point, but now the market is on a buy. The GBP/NZD is on a buy, all right? Make no mistake about it. This market is set up. Its structure is fine. You're in, let me take a look at the higher time frame here. All right. What I want you to see is the market went sideways, guys. This market went sideways. The GBP/NZD went sideways, broke out to the upside, and now has a retracement. You see that? That's a retracement. Within that retracement, you got a harmonic pattern. So you want to see a nice bullish market, a nice bullish pullback with the harmonic pattern. You just don't want to buy a market that's downtrending. For instance, this market's downtrending. You wouldn't necessarily buy this until it actually found support, right? Here you can see the market tested up, down, finding support. The GBP/NZD should be on the buy side. We also have for the Harmonic Scanner, we have Trader's Way. This is on FXCM, but you could use Trader's Way. You could trade directly on the screen with a live account. Only with the live account with Trader's Way. I've had so many people ask me, we put it up. Don't use a demo with it. It's not going to work. All right, demo, you could use FXCM. You guys want Trader's Way with real money? I set it up for you this past week. So this is ideal. You have a nice strong market up, and then you have that corrective XABC down into support, keeping your risk down here. Let me take a picture of this for you guys. How do I take a picture for you guys? Guys, let's take a picture. Oh man, how do I do this? All right, I'll figure it out. All right, we're going to save as a picture. Active chart. I got you, guys. I got you. Don't worry about it. Chrissy got you. I'm not letting you guys go anywhere without me taking care of it for you. I know how to do it. All right, sent it out to everybody. Okay, thank you, Kenny. GBP/NZD, long side. Okay, look at the AUD/USD. AUD/USD. You see all the testing up here? You see all this testing up here? This market's testing. It's finding resistance. You have a wider risk. Up here, but the market is finding resistance up here. I like this to the short side. I like this market to the short side. We've been talking about this in the live trading room for the past several days. Pushes up our shorts. Okay? Right now, this is a short. It's on a short bias. 2% risk ratio. You got 2 lots in there, 2 micros per $1,000. Don't blow up your account. If you want to use a higher risk, do it on a smaller account separate. Don't get me involved if you're going to blow your account up. That's up to you. I keep things small, Why am I in the market 25 years? Why has Chris created a lot of wealth? Why is Chris helping a lot of people create a lot of wealth live every single day? Why? You keep your risk in control. Do not blow up your accounts ever. All right? I cannot talk about that enough. I've seen so many dead bodies along the way over the many years that have come to me after the fact. And if I could have only had that conversation before. So we're having that conversation now. And I know who you are, and I'm looking right at you. You better never risk your account like that ever again. All right? So why are we looking at this like a short? Why are we looking at the AUD/USD? Watch this, guys. You always look at waves in the market. See here? You're always looking at waves in the market. Now, I apologize because MetaTrader is a little bit slower to work with, but I'm fast, so we'll meet in the middle. So you're looking at waves in the market, okay? Waves, oops, sorry about that. Waves that relate, okay? And I'll put this in here and show you what we're looking at now. So the market is in a big trading range. Trading range is right here. You see the recent high. The market's found resistance, failed up there. But what I want you to look at right here, let me just fix this. This is a zero. Oops. Okay. This is a 0, 1, 2, 3, 4, 5. Market's complete on 5 waves. Market's complete on 5 waves. Market's complete on 0, 1, 2, 3, 4, 1, 2, 3, 4, 5. Okay? You always see those completion points. Always, even on the left. Look, 1. Or it becomes an A, B, C down, 2, right? This is a perfect Elliott. Why? Because this second and third wave, 0, 1, 2, 3. This third wave is larger than this 0 to 1. It's the largest leg. Nice higher low, bang, right? 4, and then 5. 5 waves come in many shapes and sizes, and in the middle of these particular swings, you tend to get A to B, C to D relationships, or you tend to get a straight retracement. So in this here, you have this, okay? You're either going to get this, or you're going to get straight like this, okay, like you see. So it's either going to be this on one of them or that, a complex. So 5 waves, write that down, 5 waves, 1, 2, 3 pushes, 1, 2, 3 pushes, or 1, 2, 3 drives, 5 waves. Think of the word 5. 1, 2, 3, 4, 5. After that 5th completion point, the markets tend to correct. Now, what I like to see in Elliott right here is I don't want to see the overlapping of this. Although you may have it within a range, you may have this, but that's okay. You're looking at those 3 efforts, those 1, 2, 3 efforts. But here is a nice Elliott wave pattern. I'm not going to get deep into it, but guys, if you're with me during the week and you come on the Sundays, you're going to learn and you're going to learn and you're going to learn, okay? Just keep coming and don't stop showing up. I will show you what it takes to make it in the markets. I don't care if it takes you 4 weeks. I don't care if it takes you 8 weeks. You've been spending 30 years of your life or 20 years of your life not knowing. If it takes you a few weeks, don't worry about it. You're with me now. Nobody's ever going to lead you in the wrong direction anymore. You guys got that? All right? This is out of passion, not out of greed. I promise you that. So, 5 waves. I like this as a short. I like that as resistance. I like seeing that market come down now. You see how everything works? So you take this. Look, watch. From here to here, A, B, C, right? You see this. That's what you want to see. Let's go. AUD/USD to the short side. AUD/USD to the short side. Even if it comes up a little bit more, it's okay. You know, you put a little bit more of a position on. You work it. Work it, guys. You guys work it. Twerk it. All right? Come play at the game. We're here. Okay. Guys, I love this. Look at that. Look at that. Okay, like I told you, I just told you about this. Get that to the long side. Get that to the long side, that GBP NZD. Make that your little BITCH, okay? You never wake up in the markets and have any kind of fear whatsoever. Now, here the market's already turned, NZD USD. Let's see what we got here. Nope. GBP, JPY. Nope. All right, I want to show you something. This is one of the charts I wanted to show you guys. GBP, AUD. I looked at this earlier. So, the average guy, which you guys are all above average, and I'm going to make you extra above average in terms of trading. So what? It didn't get down here. So what? Big deal. Look, you have X, A, B, C, D. Let's take a look at the higher time frame. Let's take a look. And off to the videotape. All right, what do we got here? What do we got, guys? Let's take a look. All right. Okay, we were looking at the GBP NZD before. Now this is the AUD, GBP AUD. Aussie. Hey, Patricia. I know Patricia's an Aussie. She's an awesome Aussie. So what we have here, guys, is you see we got an uptrend. Market went sideways, formed a sideways range right here, sideways range. From that point, the market broke out to the upside. From that point, the market had a retracement. Okay? So in here, you actually can see we had some type of a pattern in there. The market had a retracement, then gave another shot to the upside, and then one more move down. So if you're an Elliott-tician, Elliott wave, this would be considered a move up, and then you have an ABC corrective wave. If you are a harmonic guy, all right, you start looking at things, you start saying, okay, you got the little patterns here. Let me just bring this down a little bit more. All right, you got some patterns in here. Point is, you can start looking at it two different ways. I like looking at it this way, retracement. What you want to look at is in that bigger term retracement, and let's do some Fibonacci work. Let's just do some Fibonacci work from low to high. We see a 50 to 61% retracement. That's nice. Okay, guys, we're working on GBP AUD. 50 to 618 retracement. Nice support. We all agree it has a nice corrective wave down in Elliott wave. This is called an alternate wave equality. So I'm going to show you another little trick. All right, here's gold nugget. Here's a gold nugget. You take this swing here, right, 100%, and drag it down. See that? Dragging it down. All right, and let me just change the color so you don't get all screwed up with the colors. Jeez, we don't want that to happen. All right, you see what's happening? Because you have this swing here and this swing here, this is considered, right here, 100% is considered a 1-to-1 ratio. But within that model, actually right here is the 1-to-1 ratio. But within that, most times you will get this, a 786 to 886 of that A to B, C to D relationship. You see where the market's hitting? It took this swing and then this swing down. You have a 786 to 886 relationship right around that 50% mark of the other. Actually, it should be here. This is where it started. My bad. My bad. Okay. So you got a 50 to 618 retracement right in this zone. See the 618? It's tying in with the 886. All right. You guys got that? So this is support. Okay. So you're looking at the chart. This is support. You have an uptrending market. I'm going to take all this stuff off. And let's go down to the 4-hour chart. So if you look at this chart, and let me tell you, this is MetaTrader. How do you get rid of these colors? They just don't want to disappear sometimes. They just want to fight with me. So you have the pattern come down, but although it didn't hit the exact harmonic ratio, don't worry about it. Let me tell you something. You read a lot in the books. You read a lot on these sites, and these guys have no idea what they're talking about. Listen, when the ratio, when there's enough binding geometry, when there is enough binding geometry It's a pattern. The exact patterns are from the book. Okay, I'm not going to mention the guy's name, but the exact patterns came from the book. And that's book talk. That's stage talk, all right? There's a difference. There's stage talk and there's real trading, all right? So just you take a look here. Let's just throw in 1618. Let's just throw in here 1.41, 141. Let me just come down a little bit. When there's enough binding geometry, meaning that when you see things match, all right? All right, when you see things match, that's one way to do it right there. Let me just do another one here. I gotta give up with this 2.618. I gotta give up with this MetaTrader 4. Okay, you see down in here, one more time. We'll just throw 3 in there, okay? 300. Okay, and let me just fix the color, so you guys are all on the same page with me. So we already have, number one, we already have the higher time frame, if you recall, the retracement zone. Now you have the extension zone. See here, 2618, a 141, all down in here, binding geometry. Binding geometry with the higher time frame. Market went up and market's pulling back. Drop down to a lower time frame, okay? Drop down to a lower time frame. The higher time frame is saying that the structure, whoops, sorry about that. Okay, the higher time frame is saying there's a buy. Now you're getting this. Now you're getting a pullback. Do we want to buy it there? Let's take a look. All right, let's take a look. And that's this right here, guys. I did something to my chart and it's locked up. Yeah, congratulations, Christopher. Guys, if things lock up and I screw up, don't blame me, okay? I'm moving through the charts with the passion here. So we look at this chart right here, okay? Market came down, market's bouncing. I would not buy it here. I would not. I would wait for it to come down again. So let's look at where we would buy it. Here, here, here. Fine. Okay, that would end up being like, say, a Gartley type of pattern. Guys, you want to buy this down in this zone down here, all right? You want to buy it down here somewhere. All right, down in this zone. I'm going to give you the chart so you could take it, you could look at it, but I would wait for it to come down and then you buy it. Don't buy it up there, all right? Play the game smart. Right, we already have one pattern with the GBP that looks nice. This right here, just be patient. Be patient. I'm putting that in the chat room. You got that. All right, so GBP AUD, what we want to see is this market on the 15-minute chart make another attempt down. I would not do anything right now until that happens. You see the structure, okay? You guys see how the waves end? You see all this? You see how the waves end, guys? All right, you get those reversal points. That's what I like to wait for. Market low, market high retracement. Push up, lower high. Push back down, potential higher low, back up again. Everything's a wave process, Keep that in mind. There is no immediate buy or sell. I don't particularly get excited when somebody shows me a chart that they bought it here exactly. Who cares? Look, if the market's going to turn, who cares if you gave away pips? Don't put yourself in harm's way. Let this come down a little bit. All right, let's see what else they got. Jesus Christ, look at that. All right. At least the scanner works, right? At least it works. That was the non-farm payroll. That was the day before. The European banking central bank, what they did was they lowered the overnight interest rates. So the overnight interest rates at the central bank, they lowered them, which added more money to one party took away from somewhere else, and it became a positive effect for the EUR and less for the USD. So that was a shock to the markets. The same type of shock you saw back in January when the Swiss franc depegged itself from the EUR. What I did was, so you guys know, I disconnected. We had some trades last week, and I disconnected the trader in front of the unemployment because I watch the markets also, and I'm saying to myself, I like his style, but something smells funny. I disconnected it in front of unemployment. However, before the unemployment came out, they came an hour and a half before, they came out with sudden news, shock news, which quite honestly, whoever was in that could have got hurt really bad. I know a lot of people looking long, but anybody who was trying to sell this on the way up got cremated. But that was a massive move. Now, I just want to let you guys know, after such a large move, you tend to see the market go into a coil or an equilibrium, a sideways range for a while, because look, people got hurt. People are trapped down here. Companies are trapped. Everybody's trapped. Nobody expected the news. There's whether this was pure buying or short covering, meaning that they were selling their longs on the way up or buying back their shorts, I'm sorry, which was driving the fuel to the upside. Right now, people made a lot of money keeping their stops down here, and people got hurt trying to figure out when the market can come down again to let them out. So after such a shock move, you're going to expect this for quite a bit of time, all right? And obviously now that the market's down here, is support. I'm going to go into some other stuff that we looked at last week on our night owl on what we went into. But basically, I'll just look at one more chart, all right? One or two more charts. We looked at them the other day. Those are fine. All right, so let me do this. Let me get the, all right, what did I just do there? Okay, let me just do this for a second, guys. Let me just pause it. Let me get everything set up. Trading view. All right, so we're going to look at trading view. All right, we're going to look at trading view. I was doing this the other night. I was working with somebody the other night on areas to work buys and what we were looking at the other night. However, I didn't expect this next move, then move the next day. But I do want to point out something. If you guys remember, guys, who was here last Sunday when we worked on this? Were you guys here last Sunday when we talked about the A to B, C to D relationship on the EUR USD? Who was here with me? All right, who was here? We talked about making this turn back up. Okay, so it's not, I'm not making this up, okay? So we've been looking at this whole zone. I like to look at the markets with these harmonic patterns also while they're in a zone. We looked at the A to B, C to D relationship, all right? Hey, Alberto, I promise you, if you come back every week for the next month, and I promise you, if you have a chance to sit in the live trading room with us, oh, by the way, I got a Christmas present. Hold on. Hold on. Hold on. Hold on. We wish you a Merry Christmas. We wish you a Merry Christmas. We wish you a Merry Christmas and a Happy New Year. Listen, guys, I want you to do this. Here's a trial to the live trading room. 8:30 in the morning to 12 o'clock lunchtime. You pass that out to whoever has any kind of question on what we're doing. If you want to show them what we're doing, you now have Sunday night, and you have during the course of the week 4 hours a day into Christmas. Okay? From this point into Christmas for the next 2 weeks, you can have them sit there live in the live trading room. It's a direct access. Show that to your prospects, show it to your friends, show it to your family, show it to your cousin. I don't care. Let them come and see what we do. So Alberto, you got to be in the live trading room. If you can, you'll get it. If you're here and if you're an iMarkets Live member, go to the back office, look at the videos, and then just watch what we're doing. I'm doing advanced work. This is not basic work. This is not the time to do that. I have a lot of people that are very advanced, and I couldn't do that. I'm going to be doing it during the middle of the week. I didn't do it last week. I had something came up, but I promise you on Wednesday, I will do a basic class. So Alberto, make sure when I send the email out, you're there for the basic class, okay, on Wednesday night. I believe I'm doing it Wednesday night. I'll send out an email. So A to B, C to D, all right? Here we go. Last week we talked about this. We have all our structure in place. We kept on talking about this whole zone, all right? And that we're looking for a move back up, all right? This is exactly what we talked about. Exactly. We didn't change anything, all right? So the point is, a lot of times you're going to see in the market, guys, that technicals predict events. Technicals predict events. Events don't predict technicals. Technicals. I'd like to see what you do before I sign up. There you go, brother. Free. You're seeing it now? You're seeing it free. Come with us in the morning. Hang out with us. You're going to have a great time. What happened to the volume? Can you hear me, guys? Can you hear me? Okay. So listen. Let's get back to this. This was what we talked about last Sunday. This whole area was a buy. All right. When you're dealing with these structures, okay, obviously you're dealing with risk below the market, but write this down. Patterns predict events. When you see the big market making these big patterns, and boom, out of them come out. Christine is asking, will be any live trading outside? I can't do that, Christine. I can only trade when the markets trade. Hold on a second. Need to fix your audio. I cannot do that for you. Check the platform. Fix audio. All right, Christina, and I'm going to tell you something, and just let me do my class here, okay? Let me do my stuff, and this will be the last question I'm answering. I don't care if it's 12:30 for you at night, and I don't care if it's 3 o'clock in the morning. If you're hungry enough, you'll be there, period. Let me tell you something. I'm hungry, right? I'm hungry. I work all hours. I'm hungry. I will work at 3 o'clock in the morning. If my former mentor decided to teach me again, and she said, be there at 4 o'clock in the morning, you best believe I'm there at 3:30 waiting for her. Do not give me that, oh, it's too late. Get out of here. Go someplace else. You're here to learn. You're here to be hungry. I know you, Christina. We know each other. The point is, don't bring that to me no more. You're a friend of mine. All right? So anyway, I love you, Christina. Point is, you got to do what you got to do. I can't, So listen to me, guys. Right here, what the next play is. Let's take a look at the next play. All right, so now the market went up. We want to see the next play. Guys, you can't go back and buy the bottom, but what you could do is when the market comes down, you could watch for support to come in. What you want to do, all right? Yeah, you're in my house. Okay. All right, so at some point, this market's going to attempt to come down again. I don't know what that is. Watch the 38 to 50% retracement on the first wave down. Anything that comes back down, guys, anything that comes back down into the 38 to 50%, that's a support. Markets don't go straight up. So the next play is for you to look at a 38 to 50% retracement of that move up. All right. This was a shock. And any move back. Now, what may happen first is you may get this. Okay. You may get this. You may get this. All right. Let me just. Christina. Okay. I love Christina. She's a great girl. That's why I can yell at her. All right. Okay, and then come down. So it doesn't matter if it has a straight retracement or it comes up a little bit and down or it makes a new high and down. The fact is you just stay patient and wait for the retracement. Here, no, look, unless you bought it and you stayed with it, fine. But the technicals were telling you something's going on. Something's got to happen, and kaboom. So next play, wait for that retracement, and we get a move back up on the EURUSD. Here we go. Alrighty. Let's take a look at the AUD-USD. No, we already looked at AUD-USD. Let's look at the NZD-USD. All right, let's take a look at the NZD-USD. Okay. All right. We had some work here. It came down and now it made a new high. Let's take a look and clean it up and see what we got going on. All right. Let's take a look and see what we got going on. All right. I don't particularly think that this market will make any changes before we meet again. All right. I don't particularly think this market in the next 5 days is going to be up here or it's going to be down here. So for me to draw out a pattern, all right, for me to draw out a pattern right here, I don't particularly think anything's going to happen. I mean, you're only talking a couple of days, right? Although it feels like a whole week. When looking at the daily chart, it's only a couple of bars. Let me take a look here. Now let me take a look at the lower time frame. Let's take a look and see what happened. I see 5 waves up. All right, so now we see 5 waves up. Let's take more of a peek at this and see what we have going on. Actually, hold on a second. Right here. All right, we see that, okay? So I start with the higher time frame, I don't see anything. I start with the lower time frame. You know what, Brian? I actually saw it on my phone also. I was playing with it before, and you could put the webinar on your phone. And you have me blabbing through your phone, so your girlfriend or your wife is screaming at you like, who's the nutcase? Who's that Looney Tune, you know? So let's take a look. Let's take a look. All right. Let's tighten this up a little bit. Let's put this up on a 2-hour chart. And let's open this up. Okay. Okay. Okay, I see. Let me just fix this, okay? My bad. All right, that's better. So we see that the market had 5 waves up on the two-hour chart, and it pushed into this prior resistance. What I like doing is I like looking at prior swing highs, just like this. I like looking at prior swing highs, prior swing lows. Okay, I like looking at all this. I like going back and looking at all this data on what becomes important or not. In here, this is not important. And then right here, see this? See this, guys, right here? That's value, all right? That's value. This is a value area. These are all these little swing highs, some swing lows in here. And the market had 0, 1, 2, 3, 4, 5. Remember the 5 waves? 1, 2, 3, 4, 5. Now you see that 5th wave has pushed up into all this prior data. You actually could look in the past and see all this prior data is important. See that? All right, let's just take a look at this together. All right, all this prior data. Okay, so I'm drawing it out for you guys. See all the prior data. Obviously, this area right here is important. And when the market pushed up on the 5th wave, what that did was it had that spike reversal. So now you know why it had a spike. What you're looking for now is an ABC corrective wave down. All right. Elliott typically would have an ABC corrective wave down. So you have your A, B, C. What I don't know what the hell that was. So, geez, it's drawing all sorts of lines here. Oh my gosh. The unorthodox CEO can't draw a freaking line. All right, here we go. Okay. Oh, I see why, guys. I'm sorry. Let me turn that off. I'm like, what's going on? All right. I can see it now. Post on Facebook. Chris has no idea what he's doing. So so you guys see, you have your 5th wave up, and now you're getting the push down. Any pushback up, look to short the market, okay? And put your stop above the market right here. See that? So the NZD USD, here's your roadmap. Any pushback up, look to short them because you've had your 5th wave. You see how the reasoning is? The reasoning why? You had your fifth wave, you have your spike off of that. Spikes happen for a reason. You got to look to the past. You got to look to the past. All right. Some guys say look left, but look to the past, look left, look wherever you want, but look the other way. Don't look to the right side. Iced tea. So retracement back up, look for a short. Look for a short on the NZD USD. We're not going to go further in terms of the daily chart, for the fact is, are you guys getting all the links that I'm posting? You guys getting those? You guys getting the links that I'm posting? Yes? Okay, cool. I don't know if you're not. I'm just putting it into a thing. Okay. Excuse me 1 second. There we go. Let's look at the USD JPY. USD JPY. Okay, we looked at this last week, and we were looking for a short up here for a push down, and that did happen, right? It did get you short, but it gave a limited move to the downside. My fear right now is the momentum has shifted from down to up, and that this possibly wants to make a move a lot higher. All right, kind of like inverse to what the USD is doing with the EUR, right? That's weird. It's going the same way, actually. It's making me feel that this happened, that you came out of that sideways line here to the upside, and now it's consolidating before going a lot higher. I wouldn't necessarily do anything with the AUD, the USD JPY. Let's forget about that. GBP US, GBP USD. Okay. This right here, what we were talking about on Thursday, for those in the live trading room, for those in live trading, this was not a short. We were actually telling everybody to buy this in the live trading room on Thursday morning. You guys remember that after the news? Kevin, Patricia, all those guys, Mark, we were buying down here. This push down was actually, we were talking about buying it in the live trading room. Everybody's saying yes. When they came out with their sudden news and they shocked the market to the upside, we started screaming that this is a real move. This is a real move. Buy the move down. Buy the move down, because the way it came up, that was with force. And we were talking about buy the move down. Remember, we started saying, buy all the GBP products, buy all the EUR products. Remember that? We were screaming them on Thursday morning. Buy the GBP, buy the EUR products, buy them, buy them, buy them, buy them. Remember that? So Friday, we came in and everything we talked about on the buy side is so much higher. We really didn't do so much on Forex trading. What we did was we went to the futures, and what we did was we did the non-farm payroll when that came out, all right? But I think it was it Thursday? I don't even remember. We were just buying. I remember it was Thursday or Friday. I forget. I'm sorry. Whatever that day, the third, whatever that day was, the third, or was it Friday? Guys got me all confused. Thursday, yes. So we were screaming to buy that on Thursday morning. Then on Friday, we saw this and we came in and we were buying and selling the futures. Here's what I think, guys. Here's my feeling. Let's take a look at the past on the GBP. Let's lay out some lines on why we would want to trade this, okay? And what the next play is. Let's take a look. Let's go to the past. Let's take a look. To me, this market here has found support here. We were buying like crazy. I think it was down here we were buying, as I recall, guys, right? April, we bought this. We bought this. I think we were looking at that. And now it's come down again. So it's a process before the market goes up. But evidently, it's a process that the market wants to shake out anybody that has weak hands before it starts to go higher. So that being said, let's just take a look. All right, let's just take a look. Let's just take a look. Hey, Ronnie, my beautiful golden retriever, come out to visit me. So let's see here. This is all support down here. The market's evidently made a sharp move up. So it's limited on what this can do on the way down. And let's just look at prior support areas right here. Prior support. All right, let's take that and let's turn this into an hourly chart. And let's throw some support, some retracement levels in there now. My golden retriever needs to drink water while I'm doing my webinar. Thank you, Ronnie. Appreciate it. Appreciate it, baby. Jeez. She has no, you can hear her, right? Let's drink of water. Can't stop her. They call her my dog wife. Yeah, they call her my dog wife. All right. So what you're looking at for the GBP USD, same thing with the EUR USD, is you want to look for a retracement down. Believing that 38 to 50% retracement down off this run up will be the most important to watch, okay? You could look in the past at moves down, but quite honestly, with this sudden shock to the upside, it needs to just rest itself. So any pushes down, it's limited, all right? You have a limited move down. What I would like you to see is buy the pushes down. I'll give you the zones right here. I'll give it to you live. All right, I'll give that to you live. Good area to buy on the GBP USD 1 hour chart. Let's put this back as a daily chart. Another thing that's real important to notice. All right, another thing is real important to notice, guys, is you see this right here. let me just remove everything off the chart. So I'm going to drop another nugget for you, okay? I'm going to drop another nugget. Consider this a gold nugget. Okay, so last move down. Okay. So here's another gold nugget for you, all right? The last move, the current move up is greater than the last move down. This is identifying a shift in momentum. This is not a short sale. This is a shift in momentum. The last move up is greater than its previous move down. And that right there, especially with this type of action, is telling you that there's a shift in momentum. What is expected to take place from there would be one of two things. You would either have this, okay? You would have this, or you're going to have this. So you're either going to have an A to B, C to D, or you're going to have a 5-wave up. But no matter what it is, you're still going to be buying the full first push down out of this. Okay, guys? You're still going to be buying that first push down for a much larger move to the upside. Shift in momentum from going from down to up. Going from down to up. Climax down, shift back up. Keep that in mind. That's a golden nugget for you right there. You like that, right? Okay, guys, let's take a look at the next chart. I'm looking at the GBP JPY, which we did already. NZD, USD, CAD, EUR GBP, EUR GBP. I believe we did the same thing with this. Yes, we did the same thing with this, guys. We were talking about this last Friday. All right, we were talking about it last Sunday at the Night Owl. Whoever was with our Night Owl last week, we were talking about a break above this range. A break above here is a buy, and your risk is down here. So it came up a little bit here, but it came up again. So this was one of our trades that we were looking at for the buy side. Now, I'm not going to sit and harp on that. Let's take a look at what the next play is. The next play, guys, same thing. You had a sideways range in here. All right, you have a sideways range. You're essentially looking for the same thing. You're essentially looking for an A to B, C to D relationship down. All right, same thing. Let me draw this in for you. Okay. So this right here, another nugget. This here and this. This is what we call an alternate wave equality. Alternate wave equality right here, or what they call a one-to-one relationship. What I like to do is I like to look at the length from A to B. And I look at the length from C to D to equal A to B. I also look at B, C, D for retracement. You see that? So now you have a 38% retracement that ties in with the 100% equality from the prior alternate wave. We got that, guys? See that? See how that works? So you wait for this pullback down and you watch this zone. All right? You watch this zone. Even if it comes a little bit deeper, it's okay. That's what you're looking for. You be patient until it comes down. All right? Patience. With a little patience, I've been walking along. All right, so AUD, CHF. All right, so is there let me say EURC USD CHF. Okay, this was last week. Remember that? This is last week. We talked about this. Woo. Okay, this is last week. And what we talked about, let me bring this down to a 4-hour chart. Guys, remember we talked about you had 1, 2, 3 drives up, expect a retracement down. That's why we drew this. Remember that? You guys remember that? Okay. All right. So you want to also look at these drives, these climactic moves. Trades end in a climax. They also end in 3 drives. We were looking at it up here last week, and we were looking for this to come down, basically right in here. We were looking for this to swing. We're looking at 38 to 50% retracement. Remember that? Okie dokie. All right, so what I would do, because it came down so sharply, I would wait for, say, a 15-minute chart. All right, let's take a look at the 15-minute chart. See if it can get above this 38% level first. I wouldn't do anything right now. Let it come up above, even higher. Let it go up and let it come down. It's made its flush into this zone, and then it made a pop. We don't know what it's going to do here. It may still go sideways for a while. Don't get yourself locked into it. Let it start to go up. What you want to look is 3 waves up. Okay? And you can identify them. Watch. Okay, you're looking to get another third and then a pull back down. So let it go up. Let it push and solidify the fact high, low, higher high, higher low, higher high, higher low. You see that, guys? You're designing the future. You're waiting for this to go make a higher high. And then once it establishes that and it pulls back, it should give you a higher low, a nice entry point. Okay? Just keep an eye on that. Keep an eye on that. Let me see what else we got going on. Okay, so I'm going to take 2 pictures. Or maybe not. Let me just do the 1 picture. One. And let me get rid of this. Let me get rid of this. Let me get rid of this. That stays there. And then we'll put this back on the daily chart, or the 4-hour chart. So at least you know what the play is, okay? So, you guys happy so far? We did a lot of work, a lot of charts. Okay, give me other markets that you guys want to watch that I didn't hit for you guys. Just tell me what you need now. No problem. I'll get that link for you. Let me just. What was that link? Oh, I have it up on another screen. I'm so sorry. I just did the USD CHF. I just did it. I just posted it. I just posted it. I did the GBP USD already. You guys scroll back. I already did all that. I just did it. I just did them. That's the USD CHF. We just did that. We just did this. We just did this, right? If you can't see them, then okay. Oh yeah. All right. We looked at this the other day in our service. AUDJPY. AUDJPY. All right. We looked at this the other day in our live trading room. I believe we looked at it also maybe last week. Nope, it was in the live trading room. All right. So AUDJPY is a short. AUDJPY is a short. Essentially, what we did was we took the swing high to swing low with the retracement. We took this swing high, swing low with the retracement. We took this swing up with this swing up, and that gave us an entry zone. So AUDJPY is a short, okay? Your risk is up here, okay? Your risk is up here. And any more questions? Let's see. Any more questions, guys? The Bitcoin, I'm going to look into the Bitcoin futures. I just went over USD CAD earlier. We're not going to do anything with that. XAU USD. It's a beautiful chart. Beautiful chart. The last time we looked at it was up here, and we were looking at for this to overall move down, and it did. We didn't follow up on it. But very nice chart. Okay, very nice chart going on right here. XAU USD. Here's what I say. Start working the buy side here and start adding to the buy side on a push down. So you put a little piece on right now, and then you add on any pushes down. I'm looking at the XAU. It's a gold chart. If you look here, you had a channel to the downside. 1, 2, 3, 4, 5. Okay. Watch, guys. Watch. Okay. For a pattern to be complete, you need to see 5 tests of data. Write that down. For a pattern, a channel, a triangle, you need to at least see 5 data tests. 5. 1, 2, 3, 4, 5. That gives you a completion of data points. The market ran up and it's really strong to the upside. The market's also oversold. Look at this higher time frame. How are we going to identify where the upside should come in? All right, has a lot more room to the upside. Here's where the upside should come in, up here. So if that's being said, and this market should go higher, you could buy a little bit here, add on the way down, add on the way down. It should go higher. You have here, guys. Take a look. You see this? All right. Prior swing low. You're not going below that. Let me see what I did here. I'm gonna try. You know what? I think I just posted all the links to you. I just posted all those links. Okay. So you're looking at this market on a much grander scale. All right. You see that the multiple waves to the downside, all the bounces have been pretty sharp. You see them? And you're way, way, way oversold down here. So there's no reason why this couldn't go to 1100 to 1118 in gold. So you have about a 15 to 50 points to the upside. All right, Chance? You with me? He asks, and then I post it, and then he disappears. He goes offline, the guy. Yes, sir. Okay, any other questions, any other markets that you guys want to see? I'm here for you. Not stuff we went over already. Anything else? Bitcoin futures. Yeah, I'm going to be looking at Bitcoin in the future, but not right now, not today. But I have somebody looking into it. All right. The USD, you want to see it go up a bit first, Malik? You want to see it rally first and out of the zone and then get that pullback. Right now, it's still in like a consolidation phase, and you don't want to get stuck. Right now, it's still in the consolidation phase after the news the other day, okay? So I'm going to look at the oil markets. Okay, oil markets. We looked at this the other day. All right, we looked at this the other day, and what the thinking was, I moved that. The thinking was that it could still come down to this zone. Remember that, guys? Remember we talked about this? You guys remember that last Sunday on the Night Owl? We drew this out where the market should still have that fifth wave down. You guys remember this? Who was with me? So that's why I say, don't just buy in the middle of a swing, Let it complete itself. Let it come down to our zone. Once it does, then what you do is you drop down to a lower time frame. That's why, you get guys that get caught in this stuff because they think they got a completion, or let it complete themselves and then shift their momentum. There's nothing saying that we should buy this here. Nothing saying just yet. All right? Nothing saying that the market is a buy. You want to see the shift in momentum. We still feel it can complete down here. All right? We still feel this is it still can complete lower. And, so the oil industry, oil charts, it's still pushing down. It may come down here this week. We got to wait. Big area to watch. I'm glad you brought that up because I forgot about it. Who was that? Mark and Reginald and a few people. All right. I forgot about it. All right. Yeah. We do them every weekend, every Sunday, every Sunday. Well, I got to be honest with you. I got my crew coming from, I got my crew coming from Canada, certain parts of the United States. Guys that qualified to be here, did some sponsoring, built some groups, and Daniel Westby and his whole team is coming. Not his whole team. There's about 10 of them coming on Friday, and Peter coming. Peter's coming from Colorado. They're coming from the north. Yes, they're coming here to Las Vegas, to my suite, to Las Vegas. We're going to eat, we're going to party, we're going to have a great time. They're going to learn what it takes to be a multimillionaire. Not a multimillionaire every year. All right? I can't wait for you guys to come. We're going to talk about success. We're going to work on the mindset. We're going to work on the attitude. We're going to do whatever it takes. We're going to get the job done. But they're coming Friday and Saturday. We're going to drop some serious amounts of dough on these guys to have a nice, beautiful conference room, nice dinners, one-on-one, just hanging out. The last time we did this, it was with Austin Godsey. It was with Anthony Striano. It was with Forston. It was with their whole crew. And they went to about 400 people. From that day forward, in the past month, 400 people came in their team. 400. So, Peter, your team, your guys, let me tell you something. You're going to go from where you are, because that's their upline. You guys can go from where you are to like 1,000. You're going to go to 1,000. All right? Millionaires are going to be made. Millionaires are going to be made. All right? So, next Sunday, don't worry about it. I'll still be here. I'm going to be on a high. I'm going to be excited, because I got my leaders coming. It excites me that the younger generation has taken over, period. The younger generation, I'm speaking to guys. I spoke to a guy last night, 21 years old. I spoke to guys 19 years old, 18 years old, who have bigger dreams than people 30, 35 years old. Let me tell you something, folks. I don't care who you are. I don't care who your daddy is. I don't care what your religious background is. I don't care about your color. I don't care about anything. I don't care if you can't speak English. I don't care if you could speak English. I don't care if you're broke in the street. You can do it. You have to believe in yourself. You have to say to yourself, enough is enough is enough. I can't take this no more. I can't take this no more. You got to say to yourself, I can't take this no more. I'm done. I'm done with being broke. That's the way you got to speak. You have to wake up in the morning and feel like you're the boss. You have to look in that mirror. And if you don't got a mirror, go look at a car. Every car got a mirror on it. Just look on the side of it and go, that's my mirror. That's my face. I'm the boss. I'll do whatever it takes. Pay the full price. That's what the guys are doing who's making it. All right, I got guys making $4,000 and $5,000 a month residual already set up within 30 to 60 days. 30 to 60 days. You got guys like Ryan DeFreitas. You got guys like Arsalan. You got guys like Austin and Peter and Anthony and Forston and on and on and on and on and on and on. The level of successful mindsets and successful people that are coming into the game is blowing my mind. I've never seen anything like this. I walk around and see young people. I'm saying to myself, what's wrong with them? What's wrong with them? I was looking at the wrong people. You guys have come to iMarkets Live and you're blowing it up. You're blowing it up. You don't want to swim with the sharks. Come on, Simon. You don't want to swim with the sharks. All right? You want to be a shark, man. Where's that thing? Where is it? You want to be a shark. You want to bite. Let me tell you something. This is the Super Bowl. This is the Super Bowl of your life. If you're 18, 19, 20, or 38 or 48, you could get the job done in the next 90 days. You could set your tone for the future forever. iMarkets Live will be around longer than your grandkids will be around. I promise you. It's another Amway. It's another Monavie. It's another Nerium. It's another Janice and all these big, great companies. iMarkets Live is making an impression out there. We got world-class products. We got world-class services. And I got things in place that are going to go on legacy, way past me, way past all of our execs. It's going to go on and on and on. Generational wealth is being created right now from anybody who's jumping into our company. All right? You're learning a craft. When I do this on Sunday night, you're learning a craft. You're learning a way to be successful by taking your money and putting it to work under your conditions. You're using the market's energy against itself. That's what trading is about, not fighting the market, using the market's energy against itself. When that market turns, you wait for it. And as soon as you start seeing the buying coming in, and it's coming in, and it's coming in, you're buying. You go with it. You go. That's the way you play the game. Green light, go. I taught this. I've been teaching this for 20 freaking years. You wait for that market to shift. You wait for that turn, and you go and you run. You don't wait. When you see that shift in momentum, you all over it like white on rice. All right? You do not be nice about trading. Do not. If you're a nice guy when it comes to trading, you go get it run over. I'm sorry. You gotta be a little bit tough. You have to have a little thick skin. All right? You do. It is what it is. You're putting money on the table. You have to have a little bit of thick skin so that when you take those losses, you get up and you say, "Good morning, boss. I'm the boss." You get up in the morning, you say that the markets are not the boss. I'm the boss. That's how you have to think. You have to think of yourself as the Muhammad Ali of trading, waiting for prime opportunities of success. All right. I'm going to end it with a quote, which I usually start I start a lot of my here it is, critic. I start a lot of my classes with, and I'm going to end it with this because we need it. We need it. All right? We need it. It's not the critic who counts. It's not the man who points out how the strong man stumbles or where the doer deeds could have done them better. Believe me, guys, I get pointed at all the time of all my mistakes, every little mistake. You know, the back office isn't perfect. You didn't put the proper letter on the home page. You put the wrong price. The wrong date on my thing is wrong. I get it. I get it. People point out where the doer deeds could have done them better. The credit belongs to that guy, you, each and every one of you who's in the arena, who you're getting blood and sweat and marred up and beat up, whether you're a network marketer or you're a trader. But you strive valiantly. You come back again and again and again, and you fall short. There's no effort without error or shortcoming. There's no error. If you're not making mistakes, you're not doing anything. Think about that. But who does actually strive to do good deeds, who knows the great enthusiasm, the great devotions, who spends himself for a worthy cause, and you know at best, at the end of triumph of high achievement, you've done whatever it takes. You're paying the full price. You're making the mistakes. And at worst, if you fail daring greatly. You're never going to be with those other guys, those demo quarterbacks, those sideline analysts. You're in the game. You're fighting. You're never going to be with those guys. They'll never know victory or defeat. I know what you guys are going through. I know sometimes trading is hard. It's hard to understand. Network marketing, you're scared. You come in. You just plug in. You plug into our calls. You plug into Ryan and his trainings. You plug into all our leadership who are doing their trainings. You plug into the educational side. Everybody part of one family. And in the network marketing side, you plug into the meetings and the trainings. You plug into your upline. IML can't do everything for you. Okay? You have an upline. You have a successful upline. You're an upline to your downline. Take the people by their hand and show them what they need to do. You need to be in the live trading room. You need to have the Harmonic Scanner. You need to have the Auto Trader. You need to have the webinars and seminars. You need to be on the Sunday night calls. You need to be plugged in to be a success, period. Okay? Guys, thank you so much. Thank you so much for being part of my family. Thank you so much for coming here. I'm going to have this recorded, processed, and I'm going to basically get everything done. I'll send it out in an email. But next Sunday, do not miss the Night Owls. Do not miss our live trading rooms. Do not miss our calls. Do not. I'll see you guys. Have a great night. Let's rock and roll. Let's make some money tomorrow morning. Let's make some money tonight. Love every one of you.